Hi everybody, it's James Blackwells here, JB Commercial Finance, on Wednesday the 29th of April 2020. Strange times all. This is the first time I've used Zoom for this kind of video. Thanks to the brilliant Jazz Greer who told me or put on a Facebook post that this could be done this way. It could be recorded and uploaded as a video. I think it's potentially quite a good platform for what I'm going to talk about, which is an update on the new government announced bounce back loan scheme, a tag on seemingly to the Corona Business Interruption Loan Scheme, which has been going now for five and a half weeks, I think it is now. 13% of applications have been successful to this point with regard to that scheme. That's applications, not inquiries. So I suspect once you take into consideration people who have failed the initial assessment, it's probably near a sort of 4 or 5%, but that's speculation, we don't know. So this scheme was brought out for anyone who doesn't know about the bounce back loan. It was announced on, on Monday evening, and it was announced by the Chancellor of the Exchequer in his daily announcement, and it's to tackle the problem of small businesses not being able to access the CBILS loan, the Corona Business Interruption Loan Scheme, due to their size, due to their ongoing viability, etc. This is to plug the gap there. So the key points, what we do know about the scheme at this moment in time, is that it covers anything from £2,000 to £50,000, so it's the lower end of that particular marketplace in business lending. You can apply for a maximum of 25% of your turnover, up to £50,000, a 6-year term. The first year, the interest and fees covered by the government, very similar to the CBILS scheme, as is the fact that there doesn't have to be any kind of there's the fact that it's 100% government guarantee as well, the project, and it doesn't have to be any personal guarantees behind it. We believe that it's going to be exactly the same as the CBILS scheme. I guess one of the bigger differences is that there doesn't have to be any kind of test of ongoing viability. And one of the criticisms of the CBILS scheme with the banks is, yes, they will look at the past performance of the business, as in any credit application, but also to look at the ongoing viability by cash flows, business plans, etc. That requirement is removed from this particular scheme, and the company just has to verify that there weren't an undertaking in difficulty, that's the government's words, in December 2019. So they can verify that, then they will be eligible to apply for this loan. So they could have closed in February 2020, but as long as they weren't an undertaking in difficulty in 2019 December, then they can apply. Now this, we believe, it will be a very straightforward process. Certainly, that's where it's been portrayed, a 2-page document. That's what the Chancellor said, a simple 2-page document, and funds will be available very, very quickly. They have to have been trading 12 months, we believe. I've seen a couple of conflicting things about this. I've heard people say it's a shorter period of time, some longer. 12 months seems to be where where it's going to lie on this. There'll be no early repayment penalties for this. And again, this is the other key thing, the key difference. There'll be self-certification around turnover and about the fact that it's not an undertaking in difficulty. So it seems that you can effectively, on the face of it, go to the particular portal, fill in a 2-page form, tell the government what your turnover was, tell them you weren't in difficulty, and you'd be eligible to apply for these scheme, which is astonishing, really. The other thing we know is that it'll be launching on Monday, the 4th of May. More importantly, though, what don't we know about the scheme so far? It's currently Wednesday, so we're only a few days away from its launch. We don't know who's going to deliver the scheme, the main thing. We told it's lenders who are on the CBILS panel. I find that hard to believe. A majority of those lenders aren't doing anything on CBILS anyway. So it looks like it's going to be a bank scheme. The banks do nothing about it when it was announced, and they have no idea how they're going to administer it. There's been some press release this morning from the bank saying, we have no system to actually analyse this at this moment in time. We don't know anything about it. No, are we going to be ready by Monday? Do we want to be ready by Monday? We don't know. We don't know at this moment in time. So that's going to be interesting. We don't know how much it's going to cost with regard to interest. There's been a couple again of people, chucking figures around. With regard to the CBILS scheme, it's anywhere between sort of 3.5% and 10%, it seems, depending on the business, depending on the lender. We expect, because of the low due diligence here and the low level of the client's borrowing requirement, I would imagine, and this is only guesswork, that the interest rates will be around somewhere between 8 and 12%. That would be my guess on this. Obviously, with the first year covered by the government and no early repayment penalties, you can settle it early if you want. Very interesting, though, to see the bank's reaction to lending unsecured money to businesses in difficulty who are self-certifying with no assessment of their viability at reduced interest rates. That will be very interesting. Another thing is that we don't know the self-certification of businesses. Wow. This takes us back to a time when self-certification mortgages were the norm, and an awful lot of them got into trouble. And now we're asking businesses to do the same thing without any kind of form of security in the background. What will be the consequences of falsely reporting information? If you ask people to self-cert, that's fine, but I do expect there to be some fraud committed under the scheme. I don't think there's any doubt about that. It seems to be very susceptible to it. That seems to be something the government are happy to almost take on the chin as a potential loss going forward, so they can at least get this money out to businesses at moments in time. Will there be consequences if you fraudulently report your business's turnover? Will there be consequences if you report that you weren't a business, an undertaking difficulty, and actually you were? How you verify what an undertaking difficulty is, because everyone's got different definitions of that. We're not entirely sure. There's a hell of a lot of detail about this which I'm not sure about, least of all how it's going to be rolled out and how much it's going to cost. So as always, if you follow my YouTube channel and my Facebook profiles, I do keep people as up to date as possible. But I think it's our duty as broker community and as a business community to report where there are gaps in knowledge as well. And when they get filled up, we'll let you know. So the jury's out at this moment in time. It sounds wonderful. I have a lot of people inquiring about it. A lot of people want to cancel the CBILS application to look at this because it sounds so easy, almost too good to be true. In our world, generally when something sounds too good to be true, it is. Well, we'll find out. I'm James Backles, and thank you very much for listening.